specifically tech investors will think about these things, right? They always put things into relativity zones, so relative multiples, absolute growth rates, where we came from point to point. The biggest problem with that, of course, is that most tech investors, I'd say 99% of them, are, when they assume these 12 times numbers, it's 12 times the wrong number. So again, like it's so Salesforce and I'll submit that Salesforce, Microsoft, et cetera, Zoom are going to see different numbers if we're right on -2 GDP back-to-back quarters, because the ones they're reporting are based on a 1% GDP and actually a sequential of up to almost 3. So that's what that is. There's also the whole history of multiples, right? I mean, it's just because Salesforce, quote unquote, bottomed at a lower high, which I wouldn't call bottom. I just called it a bear market lower high. It's very similar to 2001. I mean, where again, I saw my entire friendship network that was on the buy side as tech and comms analysts throughout 2001 get fired because they were constantly trying to pick relative multiple. They just kept going back to the only thing they knew, which were the stocks that they covered. And you can see that on CNBC. These are all the stocks that became famous, from DocuSign to whatever, all the Josh Brown names. He knows everything without never opening a model in his life. But that's an entirely different point. I just think that it's going to be an interesting journey. I mean, you have to keep your framework, obviously, but I think you have to also have a level of healthy macro awareness on what could tilt those numbers. Because why would you have a multiple on a number that doesn't include the rate of change of the universe or GDP? I mean, that's bananas, right?
I agree 100%. And yes, I remember 2001 painfully. I think that. So I think you're right. I think if you look at the way software a proof of concept, whatever, turns to backlog, turns to revenue and all that, I think guided numbers will be fine. I think that's not the issue. I think the issue is that we have right now what is better than expected backlog growth. But if you step back on an objective basis, these are crappy numbers, and backlog turns to revenue. So unless you have some miracle, strong acceleration for backlog growth this summer, Q2, Q3, you're going to have Q4 into next year with some pretty weak revenue numbers, really weak. And now your free cash flow catalyst is gone. Your constant currency catalyst is gone. Your too cheap or shorted catalyst is gone. Now what? But to really get long software and tech in general, but software for sure, it has to be about growth. Yeah. You can't get long the sector because it's too cheap for more than just like a very short period. You make money on that, run. Take it and run.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.